Nvidia stock bounced back strong this week, gaining more than 26%. But it's still a long way below its 52-week high. The madness in the White House continues, and there has been huge economic development since Friday. And Tom Lee says that madness is coming to Nvidia's stock. In this video, I will not only answer the simple question, is Nvidia a buy right now, but I will also analyze Nvidia's business itself, analyzing its strengths and its weaknesses. If you're an Nvidia investor, then stick around until the end, you won't want to miss this. Before we get into the video, if you find any value in this, can I ask you to smash the like button? Literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now, I've got a lot of comments over the past few weeks from people saying that they aren't getting notifications for my videos. So if you turn on notifications, make sure you set it to all. If it is set to personalized, then YouTube will decide whether or not you get a notification. You do not want this. Don't let an AI algorithm decide what you will and won't watch. So set this to all. Now let's get straight into it. Now this is huge. Trump exempts phones, computers and chips from new tariffs. As we all know, Trump imposed 145% tariffs on products from China, and this move was going to have a massive impact on US tech companies like Apple, which makes most of its products in China. But the guidance also includes exclusions for other electronic devices and components, including semiconductors, solar cells, flat panel TVs, and solid-state drives used for storing data. So for companies like Apple, like Nvidia, like Dell or Hewlett-Packard, this is a huge win right now. But the fear around tariffs is not going away so quickly, but this is, however, a welcome reprieve. As the trade war escalates, Trump has made it clear America cannot rely on China to manufacture critical technologies such as semiconductors, chips, smartphones and laptops. And Wedbush global head of technology analyst Dan Ives has weighed in on this and stated that this is a dream scenario for tech investors. He told CNBC, smartphones and chips being excluded is a game-changer scenario when it comes to China tariffs. Now, this is being reported all around the world right now as a huge win for consumers in this escalating trade war. With one report going as far as to say that the US avoids Armageddon with new tariff announcement. So we come to one of the simplest and most asked questions about Nvidia's stock. Is Nvidia a buy? Now, many consider Nvidia to be the best trillion-dollar stock to buy now. But before I look at this, I want to go through this small SWOT analysis that I made for Nvidia. It's very simple. This is a very simple and commonly used system to highlight a business's internal and external strengths and weaknesses. Of course, the strengths and weaknesses are internal, whereas opportunities and threats are external factors. So let's look at the strengths. Nvidia has market leadership. They dominate the GPU market with more than 80% market share in GPUs and leads in AI chip revenue, generating over $47 billion in 2024, which is much higher now in 2025, but simply put, their GPUs are the best and they are the standard for AI training, reinforcing its position in high-growth sectors like data centers and AI infrastructure. They have strong strategic partnerships with leading companies in various ecosystems. Tech giants like Microsoft and Amazon have facilitated the integration of Nvidia's GPUs into cloud computing platforms for AI and data processing, while partnerships with the likes of Toyota and Tesla, as well as other automakers, position Nvidia as a critical player in the self-driving vehicle space. While Nvidia reported $60.9 billion in revenue for fiscal 2024, with a 126% year-over-year increase and a gross margin of 76%. Its net income reached $29 billion, showcasing financial resilience to fund R&D and navigate any trade disruptions. But whereas every company has strengths, every company also has weaknesses. And Nvidia is reliant on non-US supply chains. So this is a simple one. Nvidia depends on Taiwan Semi for 83% of its chip production, with significant assembly and testing in China. There's high prices and chip shortages. Whereas Nvidia's professional GPUs are priced so high that they may exclude smaller businesses and limit their own market reach, like we seen a few months ago where Nvidia's production couldn't keep up with demand, and this is not uncommon in this sector. But something that could be huge over the next couple of years is competition. Nvidia operates in a very competitive landscape, and they face rivals from other companies such as AMD and Intel, as well as some more. Now, for years, Nvidia was miles ahead of the competition, but AMD is aggressively closing the gap with their RDNA architecture and has even amassed considerable traction in the CPU market with its Ryzen processors, while Intel, as we know, has been a mess for years, but they could turn that all around if managed competently. They have been spending billions upon billions on R&D over the past few years. So now let's move on to the external factors. First of all, we have the opportunities. And there is a huge opportunity in AI and data center growth. The AI market expansion offers Nvidia a chance to deepen its dominance with data center revenue projected to grow as enterprises adopt more AI solutions. Analysts forecast that Nvidia's revenue could hit $242 billion by 2027. Nvidia have expanded into the automotive technologies and have made huge advancements through its Drive platform, which is designed to develop self-driving technologies. This is a market that is sure to expand massively over the next decade. And over the past few years, Nvidia have acquired several companies and has partnerships with loads more. Think of the recent IPO of CoreWeave, ticker symbol CRWV, or when Nvidia was invested in SoundHound AI before closing that position recently. So when it comes to threats, there's some very obvious ones. First of all, global tensions. Like the current situation around the trade war and tariffs directly impact Nvidia's cost and market access in China, risking $12 billion in annual sales, even with the current exclusion on technology that I mentioned earlier. There's cybersecurity threats and data privacy concerns. Because Nvidia's operations are increasingly reliant on data and cloud-based services, this makes it susceptible to cybersecurity threats. Any successful hacking attempt or data breach could compromise sensitive consumer data, leading to reputational damage and legal issues. And then, of course, we have the escalating competition that I mentioned already. There is competition from Intel and AMD, as well as other solutions from cloud giants such as Microsoft, and these could impact Nvidia's future dominance. Now back to the most important question. Is Nvidia a buy? So GPUs are incredibly popular among tech companies trying to build AI offerings for their own users. And Nvidia is powering that trend. In its fiscal 2025 fourth quarter, which ended January 26th, 91% of its revenue came from data center segment, which is experiencing a massive surge. Nvidia has taken a commanding lead in the AI chip segment, where it holds the vast majority of the market. And Nvidia should be the major winner as the physical AI revolution unfolds. Now, this is important. Generative AI is only the most recent chapter in a longer book. In his keynote speech at Computex 2024 event, Jensen Huang said, "The next wave of AI is here. Robotics powered by physical AI will revolutionize industries. Through hardware and software innovation, Nvidia is positioning itself to be a big winner as autonomous machines become more prevalent." Nvidia Ives is a robotics development platform that lets engineers build applications for industrial manipulation arms, autonomous mobile robots, and humanoid robots. Additionally, Nvidia recently introduced Isaac GR00T, a customizable model. GR00T will accelerate the design of autonomous humanoids, a market Citigroup says may be worth $1 trillion by 2040. Meanwhile, Wall Street expects Nvidia's earnings to increase by 38% annually through to fiscal year 2027. That makes the current valuation, a PE of 37, look cheap. So finally, the tariff dip has provided opportunities. Tech stocks have taken some of the biggest hits. The Magnificent Seven are all trading well off their peaks. It looks like the narrative of the AI boom is looking less compelling in the face of broader macroeconomic concerns. Yet Nvidia's valuation might be too tempting to ignore. The stock trades right now at a forward PE ratio of just 25. It has rarely been close to that cheap in the past couple of years. However, increasing your portfolio's exposure to the AI trend by opening a small position in the leading GPU provider now makes sense. So guys, what do you think? Is Nvidia a buy right now that we have a dip, or do you think that this tariff dip is not just temporary and will continue for a lot longer, causing some of the most valuable companies in the world, think of Nvidia, think of Microsoft, Apple, and even Nvidia, causing them to drop much further than the current price? Let me know your thoughts in the comments below. Remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. But if you like this analysis, then please like and subscribe. Follow me on X and I'll catch you